Hello, fellow investors. I'm screening tobacco stocks, still under the consumer defensive, specifically PM stock, Philip Morris, and MO stock, Altria Group. Before I finally start screening PM and MO stocks, I'd like to begin with saying that I don't recommend buying these stocks. I have reservations about their business models and what they're selling. I don't like investing in what I call sin stocks. This includes gun selling stocks, tobacco stocks, stocks that undergo through rigorous battles of regulations from countries all over the world. However, I still have to be objective in this channel and give you my honest take on these stocks. But if you're ever putting money on these stocks, I'd recommend you use my highest margin of safety, 60%. But if you don't mind these headwinds, you can always use other margins of safety. This is PM stock valuation summary. Only the first metric looks good here. Trading within my allowable EPS multiple of 3, only 2.84. EPS is nicely increasing and they bought back 3 million shares in 5 years. They give out an annual dividend of $5 per share, a yield of 5.26% of the current price. The stock is now down 23.11% of the highs. The stock is trading at 1.55 times their margins. I use 10.59 here to base our assumptions and fair values from. Their margins play around 10 to 14%. I use 60% margin of safety from their highest margin of 13.64. Hence my entry PEs of 4, 6, and 8. Of course, with this margin of safety, I won't pay premium for the stock. They reported a quite strong free cash flow, trailing 12 months, with price of free cash flow of 12.42. I'd say it's cheap only because it's well within my 20 allowable price to free cash flow. I'd surely buy the stock for a trade, but I'd like to see a lower PE than the price to free cash flow. Payout ratio is too high. This is probably why they only bought back 3 million shares in 5 years. They pay out quite hefty dividends. Historically overvalued, trading at 1.25 times historical PEs. 13.18 here is the lowest average historical PEs. At 13 PEs, I think it's acceptable for PM stock to trade at those PEs since their margins play around 10 to 14%. Trading at 1.01 times historical price of free cash flow, 12.26 years, the lowest average historical price of free cash flow. I have an allowable of 20, so I don't sweat much about this metric to be honest. About the PB ratio, they don't have it, meaning their equity is at deficit. If PM stock were to get liquidated anytime this quarter, you'd get nothing back from your investment. But if you think PM stock could still be around 5-10 years from now, I don't think this metric would be a problem for the stock. Again, this is PM stock valuation summary. The stock is overvalued, trading at 1.55 times margins and historically overvalued. I have fair values for the stock at $61, and Guru Focus's intrinsic value for the stock is $44. My entry PEs, 468, are with 60% margin of safety, discounted from their highest margins. I have a high price of $46, around Guru Focus's intrinsic value. You don't have to follow me on this. You just have to discount your preferred margin of safety from their fair values of $61. Let's confirm these prices with our charts. $100 is 5% dividend yield, $83.33 is 6%, 7%, 8% is $62.5. My fair value for the stock is $61.19. I'd only recommend buying PM stock any price below $61. Again, this is not discounting the margin of safety. This is just based on their fair values. I don't recommend buying stocks at fair values. My high price is 46.24. I don't think we'll ever reach those lows. Therefore, personally, I won't buy this stock. But again, if you love this stock and you're okay paying at fair values, then $61 is the price to pay for PM stock. Next stock is MO stock, Altria Group. This is their valuation summary. I'd say it's about the same with PM stock. Overvalued, but look at the current price. My fair value and Guru Focus's intrinsic value. This is why I have a hold rating instead of a sell, unlike PM stock. The current price is close to their fair values. Still, it's overvalued. trading at 15.38 times EPS. The EPS is 1.63 from 5.31 in 2017. That's a huge drop in EPS. The stock gives out an annual dividend of $3.6 per share, a yield of 8.75% of the current price. The stock is now down 47% of the highs. They bought back 89 million shares in 5 years, trading at 1.09 times margins. I use the lowest margin here of 23.08, the 10-year free cash flow margins, to base our assumptions and fair values from. I use 28.72 as their highest margin to discount my 60% margin of safety. Hence my entry PEs of 10, 12, and 14. Their margins play around 18 to 30%. Price to free cash flow looks very attractive at 9.03. That's very low, but don't mind this multiple. Based on historical PEs, it's overvalued 1.84 times multiple from the lowest average historical PEs of 13.66. Based on historical price of free cash flow, however, it's cheaper, 0.74 times their historical price of free cash flow at 12.26. PB ratio, unfortunately, like PM stock, is at deficit. If MO stock were to get liquidated anytime within this quarter, you get nothing back from your investment. I have fair value of MO stock of $37.62. Guru Focuses has $35.24. I have a high price of $22.82. Let's confirm these prices with our charts. 6% dividend yield is $60, 7% is $51.43, 8%, 9%, and even 10% dividend yield is $36. My fair value is $37.62, but I'd only recommend you buy any price below $36. That price, you get 10% dividend yield, and then you'd be buying below my fair values. My high entry price is 22.82. I don't think we'll ever reach those lows. This is with 60% margin of safety. Now, if we'll compare these two stocks side by side based on their current prices, dividend yields, margins, current PEs, current price of free cash flow, its proximity to my fair values and Guru Focus's intrinsic value, and their overall financials recently, MO stock is the better buy of the two. Of course, I still want you to confirm this, their fundamentals, financials on your own. But for now, with this data I have on hand, MO stock, start the position any price below $36. PM stock, any price below $61. However, I'd only recommend these stocks for a trade, not necessarily a long-term play, because both their equities worries me. That's my take on tobacco stocks. See you next video.